Ridham, do you agree with that assessment that the market rallies into the event to the 15th of May?
That's what it has done actually every year.
Till the 15th of May. There's still 6 weeks to go, Rakesh.
No, that's what it...
It should have not more than 25 trading days. Because there's so many holidays in April.
At 1% a day, still 25% more. Sorry,
very pessimistic.
Carry on.
So that's
optimistic. I'm saying 1% up a day.
So that's what it does actually. If you go back to the last 4-5 elections, the market has tended to give you about 20% in the 3 months to the run-up of the election. So, this market is already up that much. So that's what it does. It tries to build an optimistic scenario for the election, and then it has sold off.
No, there is no optimistic scenario. I have gone through CLSA, all the big suited, booted analysts, that it's all of them are buried on the outcome of the election. Yesterday I wrote a note from CLSA, election outcome is going to be unfavorable, don't buy. 10,000 is the top. So I disagree with Ridham that markets are going up because of any anticipation of the election results. In fact, people are not participating because most people feel the result will be bearish.
Shabash, Rakesh. I'm enjoying the last 10 minutes of you. Really.
I did not say the markets are going up because it's anticipating a favorable election. That's what it usually does. Yeah. And then it sells off, as it has in the last 4-5 elections.
I'm telling you, that's what it usually does, but this is not what it usually does. It's not going up because the elections results are expected to be favorable. It's going up because the world is rallying. It is going up because of sheer value, and it's not going up because of the election results. And every analyst report that I see says it's going to be an uncertain government, it's going to be a third front government. If you read the CPIM portfolio, I feel I would have run away from this country. Right? So, I don't know here. I don't know how you are saying that just because it has rallied pre-election in earlier times. It is doing the same this time.
Fair enough. Yes, no,
I actually did not say this time it's going up because that's what it has done historically. So I think that there is a greater than 50% probability that we break out of the range. So the market is trading in this range. Most people I speak to are confident that it will trade in this range, 8,000 to 10,500 on the Sensex. I think there's a greater than 50% probability it breaks out post-elections. Which way? I think...
Oh, I thought you were saying break out as in not break down.
No, break out of this range, either on the downside or on the upside. Okay. So I think this range will not hold in June. That's what I think.
But my opinion is it's going to go far beyond that before the elections, before May 16th.
That I think, Rakesh, will depend on global outcomes.
Yes, so I'm saying.
Yeah, so we'll see how the guys in our plan...
What I'm only pointing out, Ridham, is that people are not participating in this rally, right? I think the general public is not participating. Because market opens down every day, then rolls back. It's like a tennis ball here. Hit it on the wall, it comes back.
That's right? Because you wake up later in the day, Rakesh. That's when it starts moving up. When are you ever in the market at 10 o'clock?
Boss, I'm in the market.
I'm not kidding. Come on. Okay. You want to slam Ridham some more before I ask my next question?
No, I'm not slamming. I'm only differing with it. Only I'm an opinionated character. That's why I'm differing so aggressively.
I see. Okay. Let me get back. Vallabh, how do you position yourself? Can you position yourself for this event?
Of course. I think a lot of our answers are in the context of the questions that you're asking, which are based on the outcome of the elections. There is a bigger reality. The bigger reality is that prices in the market are towards the lowest end. In some cases, they move 30, 40, 50% from the bottom prices that we saw. Second big reality, most relevant reality to my mind, is there's a lot of liquidity in the world. Either it's already there and more is being created. I think what else do you need for a big rally in the market? For this liquidity to become confident enough to come into the risk markets that equities are, and emerging markets are a greater risk than the developed market. And therefore, we have to look at the election results in this context, that they could have played a big role in creating this confidence that, look, money starts coming to India in a big way. And we know FII money is the momentum money. Nothing takes away the bigger reality, that the prices are low, that Indian economy, whether it will grow at 4.5% next year or 6% next year, it's a matter of conjecture, but it will grow. And when the prices are low, sensible guys looking at the long term, they definitely have an opportunity, have a bias to buy And in all this volatility that may come because of election results where people don't take a rational view, and I agree with Rakesh on that, that what happens in the next, the theater of 4-6 weeks is always irrational because people are imagining much more, maybe opportunities for people to buy. That does not mean that the market starts, booming immediately in the next 6-8 months. That's not what I see, and that's my position.
Okay, fair enough. Ridham, you talk to a large number of global investors very regularly. What would their reaction be? Say the global mood keeps changing for the positive as it is now, and a lot of people are sitting on cash, and they want to buy equities in the next 2-3 months onwards. And they see all markets, and they see India. Do you think India's political outcome will play an important card in how much of that new money which is getting into emerging markets, if it does later in the year, how much India can draw in?
Yeah, well, right now investors are clearly of that view that if the election results are not favorable, if they are bad in our eyes, then we'll stay away from India. So clearly that is something that they are looking at.
And a UPA government or any government supported by the left would qualify in their eyes as a bad outcome?
Could be, yeah. I mean, it's hard to define a bad outcome. It could take different shapes, but, a government that does not promise action will, I think, generally speaking, that's a bad outcome, and that's a government that may evoke a reaction that is, let's stay out of India. However, that is subject to change, because I don't think the market is just, going to follow one event and determine, its direction is not determined by one event. It's a very complex animal. And there are a lot of things happening. There's a Gaitna plan. There is growing confidence in America that that will be accepted and that will be the way forward. We're not sure about that. If that doesn't go through, then this rally, which is happening right now in global equities, will get snapped, and that will affect India. Then, of course, there is the whole NPL in the banking sector, and day by day. We're getting news flow which is not favorable, and we'll see how that develops. So the elections is an added element to the complexity with which the market has to deal with. An important event, very important event, but just one of those many factors that are going to influence the market in the coming months.